Dollar dip meets hash rate boom, 5 things to watch in Bitcoin this week. Analysts warn that US dollar could return to its 2018 lows as Bitcoin fundamentals steam to new records this week. Bitcoin, BTC, starts the week above $11,000 as fresh gains continue to hold. Is $12,000 next, or will bears gain control? Cointelegraph takes 5 factors that could help decide whether this week is bullish or bearish for BTC price action. US election could send dollar back to 2018. Bitcoin remains sensitive to macro phenomena as Q4 continues, and the US election run-up could produce noticeable turbulence. The outcome of a Democratic win looks bleak for one macro indicator in particular. In a report on October 12 quoted by Bloomberg, Goldman Sachs warned that Joe Biden entering the White House could spook markets in advance, driving DXY down to its lows from 2018. Bitcoin has historically seen strong inverse correlation with DXY, and fresh lows could thus be a boon for hodlers. In August, $12,500 highs for BTC/USD came in tandem with DXY dipping to just above 92 points. 2018 saw a dive to 89, 4% lower than at present. In addition, the rollout of a coronavirus vaccine would serve to hinder, rather than help dollar strength. The risks are skewed toward dollar weakness, and we see relatively low odds of the most dollar-positive outcome, a win by Mr. Trump combined with a meaningful vaccine delay, Goldman strategists wrote. A blue wave US election and favorable news on the vaccine timeline could return the trade-weighted dollar and DXY index to their 2018 lows. Last week, Cointelegraph reported an opinion that, regardless of who wins in November, safe havens will win thanks to the election result, with one analyst eyeing a $4,000 price target for gold. US Dollar Currency Index 6-month chart. Source, TradingView. Europe battles Brexit and coronavirus. Regarding the coronavirus, fresh restrictions coming in across Europe are set to produce more economic concerns. With the second wave seemingly firmly underway, various countries are seeking to enact repeated lockdown-style measures this week. Amid the turmoil, last-minute Brexit negotiations are adding to the headache for the United Kingdom, with a deadline for reaching some form of consensus on exiting the European Union now just days away. In the US, politicians have still failed to agree on a new stimulus package, which Americans are eagerly anticipating after Treasury Secretary Steven Mnuchin confirmed the issuance of a second $1,200 stimulus check. Despite the gloom, stocks are up, with S&P 500 futures gaining 0.25% prior to the open on Monday. Leading the way is China, where a weakening yuan and investors hopeful that an upcoming speech from President Xi Jinping will serve to entice more foreign investment. Bitcoin vs S&P 500 3-month chart. Source, Skew. Hash rate high leads Bitcoin fundamentals. Not so gloomy are Bitcoin's network fundamentals this week. Depending on the metric used, hash rate hit new all-time highs over the weekend, suggesting that more computing power than ever is being dedicated to mining. According to data from monitoring resources by Infogarts and Blockchain, hash rate hit 155 exahashes per second, A/s. 138s marked a tenfold increase versus when BTC/USD hit its record highs of $20,000 in December 2017. Hash rate is difficult to measure precisely, and different tools produce different results, but the trajectory is clear: Bitcoin miners are bullish. As Cointelegraph often reports, a popular theory suggests that highs in hash rate and jumps in network difficulty tend to produce Bitcoin price rises later on. The correct hash rate adjusted price for hash Bitcoin right now is approximately $32,000 per coin, Max Keiser, one of the theory's main proponents, commented last week. Once we get through this 2018 supply overhang and legacy exchange wash trading supply glut, we'll see new ATH. Difficulty has yet to show signs that it will follow hash rate to new records in the short term. Estimates on Monday showed that the next readjustment will be neither up nor down, just like the last. Data from the market indicator shows that after August sparked warnings of overexuberance, a subsequent dip is now balancing. On Monday, the index was at 52, having passed the 50 mark for the first time since September 21 over the weekend. That puts investor sentiment in neutral territory, a relief compared to the extreme greed of August and the fear that followed. The index aims to show when a market sell-off is due, TIPC aims to show